cryptocurrency prices slid on Monday with Bitcoin at a 3-week low. The risk of a trade war spooked investors and caused a sell-off across financial markets. Bitcoin hit a low of $91,441 overnight. Smaller cryptocurrency Ether has lost nearly a quarter in value since Friday. Over the weekend, US President Donald Trump imposed 25% tariffs on Mexican and most Canadian imports and 10% on goods from China starting Tuesday. Canada and Mexico vowed retaliatory measures. China said it would challenge Trump's levies at the World Trade Organization. Industry data shows almost a quarter of the 100 largest cryptocurrencies have lost a fifth or more in value over the last 24 hours. Data also showed Trump's own cryptocurrency slid below $20. The coin was launched shortly before Trump's inauguration and initially surged, hitting highs above $73.
Hello, Bitcoiners.
There is added downward pressure on crypto after a strong rally in the wake of Trump's election. Some investors have felt disappointed at the lack of immediate moves to boost crypto or loosen regulations since he took office. Bitcoin touched a record high over $107,000 on January 20th when Trump was sworn in as president. OpenAI and Japanese investment giant SoftBank have agreed to set up a joint venture to offer AI services to corporate customers. The venture will be known as SB OpenAI Japan. OpenAI CEO Sam Altman and SoftBank leader Masayoshi Son met the Japanese Prime Minister Shigeru Ishiba on Monday after the announcement. The new venture will also be owned by OpenAI and a company established by SoftBank and its domestic telecoms arm. SoftBank will also pay $3 billion annually to use OpenAI's technology across the group's companies. It aims to invest $15 billion to $25 billion in OpenAI and has also committed a further $15 billion to Stargate. It's a joint venture with OpenAI and Oracle to build AI capacity in the US. China's DeepSeek has caused investors to question the billions being poured into AI technology. Its model appears to rival the capabilities of leading US companies. Son's backing for OpenAI reflects his re-emergence as an investment force. That after slowing its spending due to the falling value of SoftBank's tech portfolio and a series of high-profile stumbles.
Asian stock markets rebounded on Tuesday after Donald Trump delayed imposing tariffs on Mexico and Canada. Japan's Nikkei index was up around 1.5% by lunchtime. Exporters led the recovery, having taken the brunt of losses a day before on fears of a global trade war. Auto giant Toyota gained close to 3%. There was a similar move in South Korea, where Samsung was among the risers. And in Hong Kong, the Hang Seng index jumped around 2.5% in morning trade. Markets in mainland China remained shut for the Lunar New Year holidays, meaning they've sat out days of turmoil. Now Trump has not delayed plans to impose across-the-board 10% tariffs on Chinese exports, and he's warned the levies could be raised even more if the country doesn't take action to stop what he says is the flow of fentanyl into the US.
We don't want fentanyl coming into our country. Now, we had another big thing, speaking of China. China's involved with the Panama Canal. They won't be for long, and that's the way it has to be.
Beijing says the drug is America's problem and has vowed to challenge the tariffs at the World Trade Organization. Besides fears of a trade war, investors also worry that tariffs will drive inflation and maybe put US rate cuts into reverse. Globalt Investments partner Keith Buchanan says the Federal Reserve now has a headache.
So they're in a really tough situation of understanding just how quickly developing this trade conflict is, and also having to set policy that really can be nimble enough to move around any changes in trade policy, and also as well as other dynamics of inflation and employment as their dual mandate dictates that they have to. So it really complicates things. In a time where it seemed like we were looking at the end zone as far as being able to declare victory on inflation moving very close to that 2% target.
All that leaves global markets on edge, driving money into perceived safe havens. Gold jumped to record highs on Monday amid the trade war fears and was holding near those levels a day later. On currency markets, the Canadian dollar and Mexican peso held steady Tuesday after soaring higher following news of the tariff delays.
Wall Street's main indexes closed lower on Monday. but partly recovered from steeper losses after President Trump said he would pause his planned tariffs on Mexico and Canada for 1 month. The Dow dropped roughly 0.3%, the S&P 500 shed about 0.75%, and the Nasdaq lost 1.2%. Trump's weekend announcement of 25% tariffs on Mexican and Canadian imports, as well as a 10% tariff on Chinese goods, initially roiled global markets. But U.S. stocks pared losses after Trump on Monday announced a 1-month pause for tariffs on Mexico and then Canada after the two U.S. neighbors offered to send personnel to the border to stem the flow of illegal drugs, especially fentanyl. Keith Buchanan is Senior Portfolio Manager and Partner at Globalt Investments.
We're now just entering the phase of how do campaign promises and stump speeches translate into actual policy. The bigger surprise is that the tariffs came before tax cuts and a lot of other promises that were made on the campaign trail. So we're still seeing what the priorities of the administration happen to be, and as we go forward, how those evolve as we start to formulate the growth prospects and, frankly, the inflation prospects going forward for 2025 and 2026.
The VIX Volatility Index, known as Wall Street's fear gauge, touched its highest level in a week amid the tariff turmoil. And Treasury yields edged down as investors fled to safer assets such as bonds and gold, which hit a record high. Among Monday's stock moves, shares of Nvidia dropped 2.8% as semiconductor stocks retreated. Tyson Foods shares gained more than 2% after the meatpacker raised its annual sales forecast. And IDEX Laboratories jumped over 11% after the animal diagnostics maker beat fourth-quarter profit and revenue estimates.
UBS Group's fourth-quarter profit beat forecasts on Tuesday, but investors weren't impressed with the lender's share buyback plan and shares dropped more than 5.5%. Analysts noted the Swiss bank's results were mixed with net new assets missing forecasts. They also said a lot of expectation was built into the price, with shares up more than 80% since the bank took over former rival Credit Suisse 2 years ago. UBS said it plans to repurchase $1 billion of shares in the first half of this year and up to $2 billion through the following 6 months. But that depended on there being no changes to Swiss bank capital rules. Swiss authorities have pledged to draw up stricter banking regulations to prevent a repeat of the meltdown seen at scandal-hit Credit Suisse. They plan to make UBS hold more capital, though it isn't yet clear how much that will be. UBS has warned the Swiss government's demands could make the financial sector less competitive. The fourth quarter saw UBS post net profit of $770 million, far higher than analyst forecasts. UBS benefited from lower than expected costs, robust revenue, and a strong performance by its investment bank.